Hello, everyone. Thank you for joining. It's a real pleasure to be at Web3 in Berlin today. My name is Mona Elisa. I am the co-founder and CEO of Melon. And today I'm going to be talking to you about how to grow healthy melons. Now, just to give you a little bit of context on this title, Melon started out with a project to build the Melon protocol a couple of years ago. And we've been in kind of full speed development mode for the last couple of years, bringing the protocol to life and preparing for the mainnet release, which is still planned to be in February next year. But as we approach the deployment date, we need to start preparing for Melon stepping back, because in February 2019, for anyone who doesn't already know this, Melon will be wound down. And this will be the real test to whether a protocol can be self-sustainable without any single party maintaining control and maintaining this protocol. So the purpose of this presentation today is really to walk you through how we think about preparing the ground. So the first part of the presentation will talk about preparing the ground, which is really about encouraging network effects and improving synergies on the network and some of the steps that we've taken to try to encourage that. The second part of the presentation is going to be all about growing melons, and this part of the presentation will focus on how we try to link the value of the token, the Melon token, to the utility on the network. And the third part of the presentation will be all about maintaining melons and how to keep the melons healthy and hopefully able to survive in a self-sustainable way without Melon. So maybe just before that, just a quick 101 for those of you who are not already familiar with Melon, although I see a couple of faces who might be. Melon is basically an on-chain asset management protocol, and it's basically a set of rules which are written in smart contract, which enable you to set up, operate, and manage a fund. All of the rules are written in code, and all of them are enforced by the blockchain. So this isn't too different from what happens in the real world, except that you can do it in a matter of seconds and you can do it for a lot lower cost. Compared to in the real world, which would take you up to a year of setting up a fund, of paperwork and intermediaries and regulatory authorities, etc., and often costs you hundreds of thousands of dollars. So what we've really seen in the last year or so is an explosion in asset management 3.0. And the first part of that is really an explosion in digital assets, not just limited to crypto, but we're also starting to see equity tokens, bond tokens, commodity-backed tokens, etc. And this creates a new possibility to manage assets on-chain. And it allows us to use an on-chain asset management system like Melon. Another really great pioneering thing that we've seen explode in the last few months is decentralized exchanges, or the peer-to-peer exchange. And we've seen exchanges like 0x Relayers, Oasis Dex, Kyber Network, AirSwap, etc. explode, and we're seeing more of them come up every day. We're seeing people start to think about how to link Ethereum addresses to identity management or reputation systems. And then Melon has really focused on the operational aspect of the fund, so really writing the rules of the fund, including things like management, performance fees, invest-redeem calculations and distribution of fees. Also risk management, so defining things like the maximum positions your fund can hold, the maximum size of the position, maximum volatility that your fund can hold, and so on and so forth. And you can put this set of rules together. It's like a bunch of smart contract that is organized by the Melon protocol, and this essentially is the rule set of your fund. It takes the form of a token on-chain, and basically investors can invest in this fund or smart contract fund, knowing that the manager can only interact with the fund with these set of rules. So they can only invest with this asset universe. They can only invest with these, they can only trade with these decentralized exchanges. They can predefine which investors are allowed to invest in their fund, and they can use the Melon contracts to predefine their management and performance fees, as well as all the risk management modules they'd like. And all the invest and redeem functions are handled by the smart contract, and so are the calculations and distribution of fees. So maybe just a quick note, these 4 decentralized exchanges that I have up here are actually, as of today, integrated into Melon. So we're really happy about that. So that brings me to the first part of the presentation, preparing the ground for Melon. This part is all about enhancing network synergies, enhancing network effects and improving synergies. So in the last few months, we've basically become aware of several projects which are interested in building on Melon or building application on Melon. And this doesn't come as a huge surprise to us because the asset management industry is very broad. And we, Melonport, have in particular chosen to focus on the hedge fund aspect. But there are many other applications in the asset management space, such as the VC use case, the pension fund use case, the insurance use case, and so on and so forth. We've even seen a gamification approach by Midas. And as we discuss potential collaborations with these projects, the same thing comes up over and over again. Each of these projects wants to fund themselves by doing an ICO, which is totally understandable because as of today, it's probably still the easiest way to fund yourself. And each ICO incurs its own token, and then each token needs to have a utility which is built into it. And then each of these systems has to have its own maintenance and maintenance and governance. So this creates isolation. And also with isolation comes inefficiencies. So basically what we thought is if we have several tokens and we have several projects built on Melon, basically all these different tokens are going to have to be needed by the user to interact with Melon. And this doesn't work out for us. So basically what we did is we said, why don't we come up with a situation which is basically going to make it much easier for the user and also increase synergies. And we did this by deciding to open up Melon to other projects and developers in order to improve synergies. Just a second, I need a sip of water. Okay, so basically, in February 2019, when we deploy Melon, there's going to be an inflation, a set amount of tokens, which are created each year. And these tokens, part of them will be available for any projects or developers that would like to apply to have a pool of that tokens in order to either build an application or to add features onto the Melon protocol. And in doing so, we can really align the network effect, and we can also improve synergies by having one common maintenance and governance system on Melon. So there's going to be 3 ways to do that. The first is going to be by allowing projects to build applications by making a funding request. So instead of doing their own ICO, they can instead just apply for Melon tokens. And we have one example of a project who's actually in the process of doing this. The other option is allowing developers to apply for grants and Melon improvement proposals. A Melon improvement proposal was inspired by EIPs. Basically, there was a lot of great ideas and proposals from our community, but we had to prioritize building our promise first. So basically, we've asked for them to be documented in a separate repository called MIP, and in future, developers will be able to apply to fulfill these MIPs in exchange for some Melon tokens. And the last is a little bit more wacky, but basically the last part of this opening Melon is for allowing projects with existing tokens to be able to propose a token swap or a token merger. And this is a little bit more complicated, but not too complicated, and probably inspired a bit by the traditional finance world. So the idea of a swap is, let's say you have project X, which already has issued its token. It's much smaller than Melon in terms of market capitalization, but there's a feeling by both projects that there would be a lot of common synergies between these projects, and it would make a lot of sense to kind of combine efforts. So how it would work is the token X project would propose for a token swap, and basically assuming that both governance systems of both token economies agreed to such a token swap, token X holders would be able to swap into Melon tokens in exchange for burning their X tokens. And this would enable 2 projects to share the same token and share the synergies of a common maintenance and governance system, and also to enhance network effects by having more talent dedicated towards a similar network. The merger request is similar and maybe a little bit more out there, but the merger request is basically the idea of another project of maybe similar size market capitalization to Mellon. And the scenario would be where both projects have a mutual respect for one another and can see a lot of synergies between working together. And basically the token swap obviously would not be able to be funded by the inflation pool because that's a very limited pool. So if the projects are of equal size, you would never be able to do that. But the merger request could work such that both projects agree to a new token contract being created and swapping each of the respective tokens into that token contract in exchange for burning those tokens. And once again, you get the shared maintenance and governance effect, and you get to scale through having more network effect, more people and more users on the same kind of infrastructure layer, and improved synergies. And ultimately, all of this also ends up in lowered cost for the user and also fewer tokens being needed to interact with one protocol. So that's kind of the first part of the presentation. So we really tried to open up Mellon essentially in order to improve network effects and increase synergies. So the second part of the presentation, I'm actually very excited about. It's all about growing Mellon. And growing Mellon, we put a lot of work into this, and we're very proud of this because we think we're the first dApp protocol to truly link the value of the token to the utility of the network. And I'm going to tell you a little bit about how we did that and the design of our token utility. But before I do that, it's just important to note what we were looking for in the design goals of the token. There were basically three main goals we wanted to achieve. The first is ensuring that the Mellon token has integrity and desirability, because obviously we want to attract the best talent to the network. The second is providing adequate incentives for the users and developers' needs of the network. Now, this is twofold. On the one hand, you want the value of the token to be high enough and stable enough that developers and maintainers will want to develop and maintain on your network, because there's obviously an increasing number of open source, interesting, exciting projects for developers to choose from. But on the other hand, you want to make sure that the protocol stays cheap enough for users to use your protocol and not go to any competitive alternatives. So that's the balance we really tried to keep in mind. And the third is avoiding the pitfalls of the velocity problem. And this is probably a whole presentation on its own, but a lot of you are probably familiar with the velocity problem. And if you're not, there's some really good writings on it by Vitalik, Chris Berdinsky, and Mike Sals, I think, are probably the three favorites of mine. And that really dictates the velocity problem, and I'm proud to say also that I think we've tackled that issue in this proposal. So we solved this problem by something we call the Melon Engine. So the Melon Engine, if we take a step back, works like this. So if you're a user interacting with Mellon on Ethereum, or actually let's start with just a user interacting with Ethereum, typically you will pay gas to the network. And that gas is a function of two things. The first is the number of computational units you consume on Ethereum, and the second is the Ethereum gas price. So essentially, you take the number of units you consume times the gas price, and that's the amount of ETH you pay. And that ETH goes to the network miners. So when you're consuming Mellon or asset management services on Ethereum, the way we've designed it is it's also designed in two steps. This time, we take the same kind of computational calculation, the number of units of gas you're consuming, but this time we multiply it by the gas price of asset management, what we refer to in our blogs as AMGU, and that's the asset management gas unit price. So basically, this has a couple of interesting effects. One is that the user only has to pay ETH, they only have to have ETH in the wallet. And the second is that you now have gas for two parts. One is just for using Ethereum normally, and the other is for using asset management application on Ethereum. And it's important to know that we will not be charging computational gas on all the functions of Mellon, only on a couple, because going back to my previous point, we want to keep the cost of the network low enough for users to not want to go to any alternatives. So where does the asset management gas go and what happens to it? The asset management gas you'll see here goes to something we call the Melon Engine smart contract. The Melon Engine smart contract basically has two functions. The first is to continuously buy Melon. So it receives ETH from the user, and all it does all day long is sell ETH and bid for Melon, and it bids for the Melon at a premium price. So you can think about it as a contract that is making a market in only one pair, and that's ETH Melon, and it's making it only in one direction. It's bidding for Melon and selling for ETH. So sellers should be attracted to come to this contract if they want to sell their Melon, because it's always bidding at a premium. And it creates a natural demand for the token, which is linked to the usage of the network. The second part of the Melon Engine is it just takes that Melon that it buys and it burns it. And this is how we create the direct linkage between the utility of the network and the value of the token. So this has two effects. I'm going to start with the second. So it reduces friction, inconvenience, and cost to the user, and that's by bringing the amount of tokens you have to interact with from 2 back down to 1. This also reduces the time and annoying factor for the user, not having to always make sure that their wallet has both tokens in them. And the second, and really the more important one, is that it aligns the token value with the network usage, providing interesting incentives for future developers and maintainers. So that brings me to part 3, maintaining Melon. Someone in this room is gonna bust me because this is not a melon tree, but it seemed to have the right effect for the presentation. Anyway, so just to recap, we've talked about 2 things so far. The first is how to create network effects, strong network effects, and improve synergies between developers and other asset management projects. The second is how to create a value of the token which makes incentives interesting for future maintainers and developers. And now we're going to talk about the maintenance and development of Melon after Melonport steps back in February 2019, and how we see this happening. But before we start that, we have to really understand the stakeholders in the Melon ecosystem. And I think this is something that not many people spend enough time thinking about. So we have identified 3 main stakeholders in our ecosystem. The first are the token holders, obviously. And in our opinion, the token holders are mostly incentivized by the value of the token, at least that's what our Telegram chat seems to imply. And we think we've solved that problem, or sort of, we can tick the box on token holder stake, when considering the stakeholder through the Melon Engine, because basically that means that the more successful the network is, the higher the value in the token, so that keeps them happy. The second stakeholder is the maintainers and the developers of the network. And once again, I think we've looked after them with the Melon Engine, because once again, the value of the token will be directly linked to the quality of the work and the value add they create on the network. And this basically means that as long as they do good work and they create a reliable, secure system, that usage in theory should continue to go up, and so should the value of the token. So second group of stakeholders is happy. That leaves, blinding light, that leaves the third group of stakeholders, and arguably the most important and the most vulnerable, and those are the users. And the users in our case are defined as the managers who set up funds on Melon and the investors in those funds. And these guys really have real money at stake. And these are the guys we really wanted to protect and think about when we were designing our governance system. Because let's face it, if we don't have users, none of us are going to get anywhere here. So that's really what the maintenance and governance section focuses on. And before I dive into that a little bit, I'm just going to say one more thing. This is not just for Melon. This, I think, holds to anyone in this room who is building decentralized application. But there is a fourth stakeholder in the room, and that is the reputation of the entire industry as a whole. And I think that it's really important to take the time and effort to to really explore governance and think about all the stakeholders instead of just going for the most exciting and the coolest tech, because one bad decision on governance can really ruin the reputation of the entire industry for everyone. So how did we do it? Well, we had 3 design goals in mind. First of all, we want to think about maximizing the user adoption. The second is preserving the integrity of the network, so that's thinking about security and reliability for users. And the third is fostering innovation and increasing network attractiveness. So I'm not going to go into too much detail on the governance side because we haven't published all of our work officially yet, but that will be published soon, so stay tuned. But we'll go into very high-level thinking on this for a moment. Once Melonport steps back, there will be a Melon Council who will be looking after the protocol. And the Melon Council will consist of 2 subcommittees. The first subcommittee is the Melon Technical Council. And these are a group of provably skilled developers who have the right skills to perform the functions of the Melon Council. And the second group of people are user representatives. We call them here Melon Exposed Business Representatives. And these are people who have significant business exposure running on Melon or value at stake on Melon. So the idea is that this model is very user-centric and skill-based, and that was by design. So there are 3 main responsibilities that the Melon Council will have. The first is resource allocation. The second is protocol upgrades, and the third is network parameters. So we'll go into each of those very quickly. I realize I've got my number in here wrong, but it doesn't matter. But anyway, let's go to protocol upgrades. So protocol upgrades and maintenance. So this really consists of 3 parts. The first is the standard code upgrades, feature additions, bug fixes, etc. The second responsibility would be the management of ENS domains pointing to the Melon smart contracts. And it's maybe just very important to note here that Melon Council will never force users into an upgrade. It will always be opt-in by the user. The second decision-making power the Melon Council will have is resource allocation. And this is basically deciding which, if we take the Melon inflation pool, deciding how those funds get spent. And that is expected to be only in these 2 ways, either fulfilling MIP's, Melon Improvement Proposals, so developers would have to apply for that and get it approved by the Melon Council, or builders of synergistic applications and use cases on Melon. And this could include also swap and merger. And the third is the network parameters. So we talked about the Melon Engine, and we don't expect the AMGU price to have to be adjusted very often based on the initial modeling we've done. But there may be an instant outside of our control where either network usage spikes so much that we may have to adjust the network parameter in order to keep the system cheap for the user, or where market volatility out of our hand really kind of goes in a completely unexpected direction, and we may have to, the Melon Council may have to adjust the network parameter to keep it cheap enough for the user, again, to remain competitive against any alternatives. So that really concludes my presentation. Just to summarize, 3 main takeaways I'd like you to walk away with today. We talked about 1, the fact that we are opening Melon up to provide increased network effect and synergies. The second is that we think we're the first DApp protocol to truly align token value to the network usage through token utility design, and we're very excited about that. And the third is that we recognize as users as the most important stakeholders on the network, and therefore we've tried to design a governance system through the Melon Council, which is very representative of the users and provable skills, so that the users will be protected. And with that, I'd like to thank you, and if you'd like to stay in touch, you can. I think we have a couple of minutes left for questions, is that right? 2 minutes for questions. So yeah, if anyone has any. Or not?
Yeah. First of all, thank you. It really looks like you tackled the velocity problem, which is great. And I think you're right that almost nobody does that or doesn't even try. What I would like to know is how much inflation is planned?
Yeah, we haven't actually announced that yet, but we've spent a lot of time research and modeling that recently. We will be publishing on that soon. But yeah, I think it's, I don't think we can say anything on that now, but we'll be publishing on it soon.
Just a very basic question. Like, if I'm a hedge fund,
Yeah.
I get fiat, I convert that to Ethereum, and we have a framework where I use Ether to engage in your I guess,
Yeah.
how it's set up, right?
Yeah, so workflow-wise, the question is, okay, you have Ether, now how do you interact with the fund? Very good question. I didn't go into too much detail on this because it wasn't the purpose of the presentation, but I think it is important to understand. So basically, once you create the set of rules in the fund and deploy it to the blockchain, it basically takes the form of a token with its own token fund address. So if, what's your name, Jin? Jin wants to invest in the fund, he will have to send Ether from his wallet to the fund address. And assuming you can choose to pre-permission investors or not, it's completely up to the user. But assuming that Jin was kind of permissioned to invest in the fund, he would just have to send ETH directly to the fund, and the fund contract would create new shares in the fund and send it back to him. Those fund tokens would be redeemable at any time for the underlying assets in the fund. And he knows at all times that, say, I was the manager, I can only manage his assets within the predefined rule sets of the fund, which start to be quite extensive. So you have full security to know that I can't run, well, barring any bugs in the code, but to know that I can't run off with that fund or spend it in any way which wasn't pre-permissioned by the smart contract.
But I wouldn't have any exposure to Melon tokens?
No, you wouldn't have any. You don't need to, actually, that's one of the beauties of the Melon Engine design. You don't even need to own the Melon token as a user. It will just get bought for you as you're paying gas to the network when you're using certain functions, and the ETH will get translated into Melon through the Melon Engine smart contract.
And the Melon token, is that like capped at a certain level? So, I mean, to make it, you said competitive. I mean, what if it just keeps on going?
Yeah, that's the third job of the council. We've modeled it, and we see, like, you know, conditions would have to be really extreme for it to start becoming unaffordable for the user. But if they were to become completely, like, either because of market volatility or huge spike in usage, then the Melon Council would have the possibility to be able to adjust it in favor of the user. Any other? Did you have a question?
What are the incentives for the Melon Council?
Okay, so there's a very good question. So out of the annual inflation created, a small percentage of that is distributed to the Melon Council. It's a fixed percentage, and it's vested. So it kind of does two things. One of them, it aligns their incentives longer term through the vesting. And the second is that it stays fixed as a percentage. So their incentive is also to create value over time so that the pool grows also over time. I think I'm being told we have to stop. Thank you guys very much. If you have any other questions, just reach out to us.